Hello traders, you're welcome to this video and I especially welcome you back to the Forex Geek channel. If you are struggling to trade ranging markets, you are not alone. Alright? Ranging markets or sideways price action can be frustrating if you don't know how to approach them. Alright? But don't worry, in this video I'm going to be showing you the best trading indicators for ranging markets that will make navigating these conditions so much easier. Okay, so you might want to grab a notebook, hit the like button, and let us dive right in. Oh, and don't forget to subscribe if you love content like this. So first off, let's quickly define a ranging market. Okay, a ranging market basically is when price is moving sideways. We can see that here. Okay, whenever you have price moving sideways between support and resistance, you have a ranging market. Okay, without forming a clear trend, the price is literally going sideways, you have a ranging market. So ranging markets are common and often catch traders off guard because they require a different approach compared to trending markets. Okay, but with the right indicators, you can spot opportunities and avoid unnecessary mistakes. All right, so let me break down the top 5 indicators I personally recommend for trading ranging markets. Okay, the first indicator on the list is the relative strength index, all right, or the RSI for short. Now, this indicator measures the strength of price movements and helps you identify overbought and oversold conditions. Now, in ranging markets, this is incredibly useful. For example, when the RSI hits the 70 level, all right, it signals that the market might be overbought and ready for a reversal to the downside. On the flip side, when the RSI drops to the 30 level, it indicates oversold conditions and potential buying opportunity. So here's the key. In a range, RSI works best when price is bouncing between clear support and resistance levels. All right, so use it to confirm those reversals and fine-tune your entries. Now, next up is the Bollinger Bands. All right, I'm going to be adding the Bollinger Bands to the chart. Bollinger Bands are fantastic for understanding price volatility in ranging markets. Now, this indicator consists of 3 lines, as we can see. We have the upper band, the lower band, and a middle moving average. Now, in a range, price tends to oscillate between the upper level and the lower level, right? Between the upper and the lower bands. Okay? Now, when price touches the upper band, it could indicate resistance. And when it touches the lower band, it could indicate support. All right? So, a pro tip is to look for squeezes where the band narrows. For example, what happened around this zone, because this is a zone of consolidation. This can signal a potential breakout whenever you notice a squeeze. All right, for example, around here we noticed a squeeze. Look for squeezes where the bands narrow. All right, this can signal a potential breakout. We can see that we didn't exactly have a breakout around here, but this was where we eventually had a breakout to the upside. Okay, however, when you want to trade a consolidation market, just know that the price will be bouncing between the upper bands and the lower bands. So around the upper band you can enter a sell, around the lower band you can enter a buy. Okay, now the third indicator is the moving averages. Okay, moving averages might seem really simple, right, but they are powerful at the same time. So we're just going to be making use of the 50 period moving average and the 200 period moving average. Okay, so in a ranging market, the 50 period or 200 period moving averages can act as dynamic support or resistance levels. Now, considering that this range is quite a tight range, is a limited range, so we can just decide to focus on the 50 and not the 200. Okay, while moving averages are typically used for trending markets, they can actually help you stay on the right side of price action in a range. For instance, if price consistently respects the 50 EMA, as what we can see here, right? If it respects it as a resistance, like here, you can look for shorting opportunities. Then in the case where you notice price bounces, like here, the price bounced off it as a resistance, you could enter sell opportunity. But around this point, it was like a confirmation of this buy, but this would have been an ideal place to enter the buy. So using moving averages can be more of, confirmations, because they're not going to exactly give you early signals unless if you want to use a smaller period moving average. Okay, so let's just try the 20 period moving average. All right, so if you are using the 20 period moving average, you'll notice that you're going to get earlier signals. Okay, and then going even lower, we can try the 10 period moving average. Okay, so when you are trading a ranging market, you might want to just focus on maybe the 15. Let's try the 15 because this particular range is quite limited, right? So you can actually try using the 15 period moving average, and you can see that we had signals come earlier. Okay, but remember that the lower the period, the higher the chance of getting false signals. Okay, so just bear that in mind. Then another indicator we're going to be looking at is the stochastic oscillator. All right, so this is the stochastic oscillator. It's another gem for ranging markets. Okay, so like the RSI, it measures overbought and oversold conditions, but does so with a bit more sensitivity. In a range, the stochastic oscillator can help pinpoint precise entry and exit points. So you can wait for the lines crossing in the overbought or oversold zones. Okay, this can signal an upcoming reversal. So whenever you have the stochastics in the overbought territory and pointing downwards, the sell signal, and when you have it in the oversold and pointing upwards is a buy signal. Okay, remember to always pair it with support and resistance levels for greater accuracy. Right. So finally, let us talk about the volumes. All right, the volumes indicator. Okay, so now one of the advantages of the volume indicator is in as much as the volume indicator is not as widely discussed. All right, but it can be invaluable for identifying where the majority of the trades are taking place. For example, you can notice that whenever we have a spike in volume, it shows that there was significant volatility. There was a higher chance of having a strong move. All right, whenever you have that spike in volume. So you can see around here, when we had the spike in volume, you can see that the sell was significant. And then we had, declining volumes, and, we just had, some low volatility movements. And then at this point, when we were about to have a, reversal to the upside, a bullish move rather, we can see that there was a little increase in volume. Can you notice that? There was a little increase in volume. So that confirmed this buy move. And then when this sell was about to happen, you can see in as much as this decrease, these short lines shows that there was low volatility. All right, but you can see that when there was a little increase in volume again, you can see that was when this sell was about to happen. And then right at this point, you can see there was a little increase in volume again, and that was where this buy was about to happen. And then here again, let's just fast forward to this point. You can see that when we're about to have a bullish move again, you can see that there was increase in volume. All right, and then you see when we're about to have a breakout, there was a spike in volume. So basically, the volume indicator can give you some, some useful tips. all right, with respect to volatility, with respect to breakouts and all of that. Okay, so there you have it. 5 powerful indicators for trading ranging markets. To recap, we covered RSI for spotting overbought and oversold conditions. We covered Bollinger Bands for identifying key price levels, moving averages for as dynamic support and resistance, the stochastic oscillator for precise entries and exits, and the volumes indicator for pinpointing high volume areas. So if you combine these tools with solid support and resistance analysis, you'll have a much clearer picture of what is happening in a range. All right. Now, I would love to hear from you. What's your go-to indicator for ranging markets? Drop it in the comments below. Also, don't forget to like this video, subscribe to the channel, and turn on notifications so you never miss an update. In the meantime, thank you for watching, and as always, happy trading.